Hey fellow subscribers, welcome back to the channel. Today I'd like to take some time to review the Euro Yen trade that we sent out yesterday. So you can see that this trade went on to hit 60 pips in profit and now it's on its way to hit 90 pips. So in this video, what I want to do is I want to break down the thought process and how we actually found this trade. Now this is not an easy trade to catch, and it's also not easy for you to profit because what happened was that the market did a big fake out here. So at the point of entry, our entry was at 129.99, which was somewhere around here. Let me just draw it. Our entry was here. You can see that price still went up to trigger the stop losses. Traders who shorted here and put their stop loss here. Okay, I'm sure some of you perhaps even panicked and got out early with a loss before this movement come down. So even though this was a very profitable trade for us, I don't think that everyone caught it because this hasn't been easy. Okay, seeing price go up like that hasn't been easy. So let me explain to you why we took this trade. So let's look at the H4 chart. Okay, at a glance, you can tell that the market structure is bearish. So you have a double top here. You have the first top and the second top. And of course, the neckline is somewhere around here, which was broken. Okay, in fact, if you were to draw this as the neckline, then you can see that price rejected this neckline perfectly. Okay, so the fake break movement is actually just spiking to this level right here. Okay, however, that's not the main thing that got us interested. Okay, what we really like was that this swing high and this swing high, you just connect it, you will have this descending trend line. Now, bear in mind that the market condition is bearish. Okay, it's very clearly bearish. You have a high here, low, lower high, lower low, lower high, lower low, and lower high. But we wanted to go short at the right level. Now, this level is strong, but if we were to go onto the H1 chart, notice that right at the top over here, this movement here, this actually qualifies as supply. Okay, again, I spoke about this concept multiple times on this channel. I talk about the concept of supply and demand. Now, what I have here is a whiteboard where I'm going to just show you the pattern of a supply and demand zone. Okay, just a very quick one. I don't want to spend too much time because I have previously uploaded a video that addresses how a supply and demand zone looks like. But in a nutshell, what usually happens at a supply demand zone is that you have a small candle like that, and then after that you get big candles that start moving really fast. So in a sense, you have a consolidation here in the form of a small candle. Then after that, you get big candles, signifying that there were a lot of sellers of this level. So this is how a supply zone looks like. Of course, in the case of a bullish setup, it's the opposite. You have a small body candle right here, and then after that, price just rallies and make big candles towards the upside. So just look at the candles right here. Okay, let me just zoom in so it's clearer. Now, if you were to look at this candle right here, you can see that this was a doji, so it's pretty small. And then just look at the sell down that results from this movement down. You have one candle, two candle, three candle, four candles, and these four candles are pretty bearish. Okay, so what happened was that the market purposely did consolidation right here to trap sellers. Okay, sellers who shorted here, sellers who shorted here and placed their stop loss above, because perhaps they saw that there is this trend line and they say, okay, this is probably going to act as resistance. So what did they do? They do something like this. This is a very common way of trading. Unfortunately, most people get it wrong. Okay, they short like that and perhaps their target is the recent low. They put their stop loss above here, but the price actually went on to trigger the stop losses first, take out the stop losses, and then after that proceeds to sell down. And that is why in this signal that we sent out, you can see that our stop loss was 130.29. Okay, it's a 30 pip stop loss. It's not a 20 pip stop loss. So where was our stop loss? This was actually the trade. Let me just plot it out for you. So this was the entry and our stop loss was here. So you can see that our stop loss was very strategic. Okay, it's precise. We place it just above this supply zone. We didn't just randomly put in a stop loss of 30 pips without considering the fact that this was supply. Now, granted, price might have just started selling down, Okay, we didn't really know. If we knew that price was going to go up straight away first and then selling down, then of course we would have put a limit order here. But at the point of entry, we didn't know. Okay, so since we didn't know, we had to have a wider stop loss to account for the fact that price might do something like this. Okay, so if there's one lesson that you have to learn from this trade setup, is that your stop loss placement is actually more important, because if you set it like that, then you would have lost money on a trade which you were spot on correct. Your analysis was correct, but your stop loss was wrong and you lose money because of that. Okay, so this is why trading is so difficult, because you do not just need to get the direction right, you must get the timing right and you must get your stop loss right. Okay, do not use too tight a stop loss, especially this week where we have a weepy market where the market's not really moving. So I hope you got a ton of value from this analysis. A similar setup is happening on dollar CAD. So we actually sent this trade out to our premium subscribers just a couple of hours ago. Again, it's the same exact thing. So let me just break it down for you since we are at it. So you can see that right over here, this is actually a supply zone. Okay, we have a consolidation here, and then you have 3 bars of selling, 1 bar, 2 bar, and 3 bar. And these 3 bars are pretty big, especially this one right over here. So just contrast this with the simple drawing that I drew over here. You can see that it still follows the same pattern, a small bar and then strong selling down. Now, you have supply here, and then of course this was a high here, which a lot of traders went ahead to short and put their stop loss above. So perhaps they did something like this, expecting this resistance to hold, and they put their stop loss above, and lo and behold, the market has to do a movement up just to spike out this stop losses. So I hope you can see how simple this setup is. It's exactly the same thing as this euro yen over here, which you can see that we actually made money on this one. Okay, granted, I do not know if we will actually make money on this dollar CAD because it's still early. But if you haven't already shorted dollar CAD, I don't recommend that you chase this trade. Okay, let's say you are a free subscriber and you didn't receive this trade, please do not chase it, because if you chase it, your risk to reward will probably not be very good. Okay, but again, it's the same exact setup. So what you can do is you can train your eyes to spot this kind of supply pattern and this kind of demand pattern, and then look for a fake out of that level, or rather a fake out of a recent high or low, coupled with a supply or demand zone above or below. Okay, this is a powerful strategy that you can use, and it's something that I personally like a lot, because you are actually catching price at the top. Okay, while people are buying, you're selling at the top, or while people are selling at the bottom, you are buying at the bottom. Okay, so this is pretty powerful stuff. Hope you got value out of this short training that I have for you. Now, if you want more training, then please head over to our free day trading guide down in the description down below, right? It'll take you to this website, put in your email address, and we'll send you a free day trading guide. Okay, it's totally free. Please input a legit email, because we will email it to you. So if you put a fake email, then you will not receive it. Okay, if not, thanks for watching, right? Really appreciate it. Would appreciate if you do me a small favor and hit the thumbs up button if you got value. Also, if there are any other currency pairs or cryptocurrencies that you'd like me to analyze, do leave a comment down below so that my team can review whether we should create a video about that. If not, thanks for watching. I'll catch you in the next video.